Hey everyone, welcome back to Investing Club. In this video, we're going to be talking about a change that's been happening in the stock market and why I think it could potentially lead to something bigger. So a couple days ago, I was looking at all my stocks, and surprisingly, all my stocks were going up. Even though, as you probably know, my largest holdings are banks, radio companies, etc., I don't own any of the huge tech stocks that have been driving this market up over the past few months. So we take a look at a stock like OZK up almost 7% in the past 5 days. We can take a look at what a company like Cumulus has done in the past 5 days, up 28%, even though a big part of that was their earnings release, still a huge jump in the share price. But then you take a look at some of the big tech stocks like Amazon is down 2% over the past 5 days. And then you can take a look at another stock like Tesla, for example. And over the past 5 days, they're down as well. They're down 8%. So obviously we're seeing something very strange in the stock market where for the last couple of months, everyone's been accustomed to tech stocks going up like crazy, and all of the classic value stocks, mostly small cap names in industries like industrials and the financial industry, have been lagging. So it seems odd that over the past week, this trend seems to have reversed. So we can take a look at how the different sectors are performing, and if we want to take a look at the long-term trend over a 1-year performance, what's been doing the best? Technology, obviously. Then we have consumer cyclical healthcare. And so what sectors are doing the worst? It's the financials, the utilities, the real estate, and energy. And it makes sense when you think about it. Those are the industries most likely to be impacted by the pandemic. So now we can go up into a shorter time frame, and over the 1 week performance, over the past week, what industries have been doing the best? And it's almost the opposite of what we saw for the 1 year. It's industrials, financials, and energy stocks have been doing the best. Technology was the absolute worst sector to be in over the past week. And you even see metals like gold and silver, where gold was on an absolute tear lately, and today we saw a massive drop in the price of gold and silver. Today gold dropped by over 5%, and I read somewhere that this is the worst drop in gold since 2013. So obviously something's happening here where all of the stocks that have been favorites this year are being sold off, and that money is being put into industries that have been lagging. And this is a fairly common occurrence of what it's called is a sector rotation. And what a sector rotation is the movement of money in stocks from one industry to another as investors anticipate the next stage of an economic cycle. So I think what we're seeing here was to be expected, where we see tech stocks just keep being bid up higher and higher and higher. Eventually it's going to get to a point where investors realize these valuations don't really make any sense. And instead of buying these tech stocks that are trading at 15 times sales and have PE ratios of 100, that money could probably be put to better use in stocks that are still high quality companies but that are trading at PE ratios under 10, like in the financial sector and in the industrials. So I think we're starting to see this rotation of money from these high-flying tech names to some of the more undervalued industries in the stock market right now. And as a result of this, a category that's been doing very well over the past week is small cap stocks. And one of the catalysts for this is stronger earnings revision. So back in March, when we had all this uncertainty in the stock market, the companies that investors were most concerned about were mostly small cap companies that were in more of the traditional business models like banks and industrials and retail, where investors are pretty certain that their earnings are going to be hurt over the short term. So investors probably thought, instead of putting my money there, let's put money into a tech stock like Amazon, like Apple, like Facebook, like Zoom, like any of the software companies, that they're already trading at pretty high valuations, but their growth likely won't be hurt that much from the pandemic, and in fact it may even help them accelerate their growth. But now what we've seen is these small cap stocks are starting to come back to life, and their earnings are starting to increase. And so investors are taking that information and rotating their holdings from inflated tech stocks to these undervalued small cap names. And this is certainly good for my portfolio, since all of my stocks would be considered small cap stocks. I don't own any of the huge names like Apple, like Microsoft, because in my opinion, they're pretty much all too pricey. And so when you're in a market like this and you have to look hard to find good deals, usually the smaller you go, the better deals you'll find. And so that's definitely what I've been finding over the past year or so. And so as of right now, all my holdings are small cap companies. And the shift has been pretty noticeable when looking at my portfolio over the past week, where this is the best week I've had in a while, because all of the money is flowing into these holdings and these funds that hold small cap stock, which my investments are a part of. Now here I'm pulling up a chart, and here is the big concern that I have for the stock market right now. This is a stock I've referenced before in a previous video, and essentially what this is a chart of the 2008 financial crisis, and it's two very important charts laid on top of each other. The blue line is the normal stock market, the SP 500, and the red line is the oil and gas ETF. So that represents the oil and gas industry as a whole. And so what happened back in 2008 in the 2008 stock market crash was that we saw the market start to roll over in the middle of 2007, and the market was slowly drifting down all the way until 2008. And then finally at 2008, we saw the huge crash, and that's where we eventually found the bottom. Now, when you contrast this to the performance of oil and gas, what happened? You actually saw quite the opposite for the first year. Even though the stock market was trending down, you saw the oil and gas industry actually keep going up and make new all-time highs. But eventually the reality caught up to the oil and gas industry, and their stocks crashed as well. Even though the stock market was gradually going down, we finally saw the huge crash all the way down to the bottom when the oil and gas industry finally capitulated, and when we saw that industry sell off, even though it was performing the stock market as a whole by a very large amount. So you may be thinking, well, that's good to know, but what does that have to do with right now? Right now, oil and gas companies are doing horrible, so how can I apply this to right now? And the way I see it is I think tech stocks right now are acting very similar to how the oil and gas stocks were acting in 2007, 2008. So here the chart is up to the present, and the red line is the NASDAQ, the QQQ, which is comprised mainly of tech stocks, and the blue line is still the SP 500. If you compare this chart back to the 2008 chart of the oil and gas industry, they look very similar, where even though the S&P 500 has been going sideways and is still down slightly from its all-time high, you see the NASDAQ, we saw the quick drop in March, but it's quickly rebounded and is making new highs. And so where I think this gets dangerous is if investors finally realize, well, these tech stocks are way too highly valued for what these companies are actually giving us. We're seeing growth slow in every part of the economy, and tech stocks are no exception, where after the initial boom in growth you're going to have from a huge amount of users for these tech services, that's eventually going to slow down. And after that, where does that leave the tech stock at these insanely high valuations? And so it's at that point where I think that these tech stocks, which have been holding up the markets, are going to fall. And if they do fall, I think that would cause the rest of the stock market to fall with them as well. And I think that could result in a huge crash and panic. Because right now, a lot of investors are fully invested in these tech stocks, thinking that they can't go wrong. These tech stocks are what's going to save me, because people will always have a demand for them, even with the shutdowns. And I think if we start to see a sell-off in these tech stocks, people will realize that there's no industry that's actually completely safe, especially these overvalued industries like the tech industry, and I think that has the potential to send people into a panic. So I'm not predicting that this is starting right now, but it is something to watch, where we see the sector rotation where the tech stocks are starting to be sold off and are being put into more of these value stocks. It's something to watch to see if this is just a normal stock market rotation, which does happen every so often. It is a normal activity in the stock market, or if this is the start of something bigger and it's the start of the tech industry being sold off by a large amount. So that's what I wanted to show you in this video, something I'm watching pretty closely. So let me know what you think in the comments. Is this just a normal correction off this huge run up we've had, or is this the start of something bigger where there's certain catalysts in play, like the possibility of no new stimulus money coming, that could cause investors to start selling their stock? I'm curious what you all think, so leave a comment down below. And if you like this video, do me a huge favor, hit the like button. It really helps out my channel a lot by pushing my videos out to a larger audience. And if you haven't subscribed to the channel yet, do it right now and click the bell icon so you get notified whenever I post a new upload. And that's it for now, so I hope to see you on the next video.